QuickBooks Pro Desktop 2021. Bank Reconciliation Month Number 2, Checks and Decreases. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We're going to be continuing on with the bank reconciliation for the second month. To do so, let's open up our balance sheet first. Going to the reports dropdown, company and financial. We're going to go on over to the balance sheet standard. We're going to change the date. I'll just change it up top this time to 02/28/21. So that's going to be our ending cutoff date. We're looking at the reconciliation, the GL balance or our balance sheet balance being 109/24/88. We have the bank statement that is open. We have an Excel worksheet. You can open up the Excel worksheet if you have access to it, or a PDF file of it, or you can just follow along here as we go. And obviously the ending balance here is the 104,689. We will be reconciling the two as we do the bank reconciliation. Let's also open up the prior bank reconciliation for the end of January by hitting the reports drop down up top. We're going to go to the banking. We're going to take a look at the previous reconciliation. I want to just take a look at the detailed one, only the detailed one. That's the one we want. So we'll display that one, and I'm going to make this a little bit larger, so we'll make it larger here. And we were concentrating in on the uncleared transactions. Too large. That's too large. Too much. Okay. So we were concentrating in on these uncleared transactions. These are transactions that were the reconciling items last time, that are beginning reconciling items. And we saw this time that these items are going to basically clear in February, even though they were written in January. That's the timing difference at the first point, at the first cutoff of our time period here, which is as of the end of January 31st, or the beginning of February 1st. So those items we saw last time that we actually found them here. We found them on the bank statement, so they had cleared except for that one check, which I think was to Verizon. We're kind of concerned with that one, so we'll talk about that later. But those had cleared over here. Now we're going to continue on and be checking off these items in the withdrawal side of things, or the check side of things, as we reconcile. So let's go into the reconciling item in QuickBooks. We're going to go to the banking dropdown. We're going to go to the reconcile. We had already started the reconciliation, so we already did this beginning component. If you hadn't seen that, take a look at the prior presentation and we'll go through that. So we're going to continue here. And we had checked off the deposit side of things. Now we're on the checks and other decreases side of things, which is usually the longer side of things that we have to deal with. Our basic rule is the same. If it's on our bank statement, but not in our books, we probably have to fix our books, meaning the bank statement's probably correct, unless the bank statement is wrong, which is not generally the case, and then we can talk to the bank and see what happened here. And then if it's on our books, but not on the bank statement, then we would assume those to be outstanding checks. So in other words, after we check everything off from the bank statement, we should have reconciled over here. We'll still have things on our books in here that have not been checked off. Those will be the reconciling items that QuickBooks will then use to do the bank reconciliation. So let's go through this. That means that we always want to be going from the bank statement to our books. We note that if we have check numbers, that can help us out because the dates might be more not as helpful for the checks. They're not going to be as close as they may be on the deposits, especially if we have a lot of checks that we write, because checks can take longer for someone to get them, deposit them, and then their bank to talk to our bank and whatnot. If you have electronic transfers, then it might be a little bit closer. The dates will be more relevant to you to use. And then although you don't have check numbers, you might have banking information that's then in the system as well. So you might have the vendor information that will be there if you have those electronic transfers, rather than having to go to the canceled check if I wanted to see more detail on these items. But either way, if I wanted to see more detail, I could typically go to my online banking account and look at the canceled check, or if it was an electronic transfer, to the detail related to the vendor possibly might be more than what's on the bank statement. So we want to have that handy to, if we can, the online account, so we could check on anything if we so choose as we go through the bank reconciliation. Okay, so here we go. We got the 11,000 for the 1006. So here it is. There's the 11,000. It was written, you'll see once again, in January. It wasn't written in February. Why didn't it clear last month? Because it just didn't, right? It didn't clear the bank yet. It hadn't the check hadn't cleared. So it cleared this month, and so that's fine. So that's good. We're going to say that's green. Let's make that green. Right-clicking on it and Greenify it. Let's Greenify the whole thing. I'm just going to Greenify the whole thing. And then the next one is 500, 1007. So 1007 for the 500. That's this one. Once again, it was written in January, but it cleared in February. That's fine. So we're going to say, all right, that one's done. Then this one's the 1011. So 3512. That's this one. So we skipped the Verizon one. Where did that one go? I don't know. We'll have to go back to that. But this one is written in January, cleared in February. So I'm going to Greenify that. So that's good. And then this one's going to be on 10/12/628. So 10/12/628. So there is that one. Let's Greenify it. We're going to Greenify it. So there is that. And then we have the 10/13/135873. So 10/13/135873. Well, looks good. Let's Greenify that one. And then we've got the 3360/1015. 10/15/3360. So that looks good. Greenify. And notice this has to work because we're just taking time. As long as the numbers are exactly the same, which they should be, then it has to work, right? And if the numbers aren't exactly the same, then there might have been a miskey in some way, shape, or form. So in other words, if we wrote the check by hand and then entered it into the system, then maybe the hand check that we wrote is different than what we put into the system. And then again, we probably would have to depend on what's in the system and change the check that we wrote or make an adjustment for it. But if you actually write the checks from the system, then that won't be the case because you wrote the checks out of the system. They pretty much have to line up, so these two will be the same. So in any case, we got the 10/14/135873, 10/14/135873. Let's Greenify that one. Greenified. We have the 10/16/1697/17. Here we go, 1697/70. Got that one. Greenify it. And then we have the 10/17/830. 10/17/830. We could do a couple of these at the time if we have like a good memory. It'd be better if they were side by side, but let's do these two at the same time. 10/18, 10/19, 156, and 667. 10/18, 10/19, 156, 167. No problem. Memory like a trap of steel of some kind. So then we've got down here the withdrawals, that these are going to be items that are on the bank statement that are not on our books, and therefore we're going to have to add them to our books. So if we go back to the books then, we don't have those other two items. We're going to have to add them. We're out of balance by the 520. So there's the 520 that we're out of balance by. And then we have these items that haven't been checked off. So why aren't these checked off? Well, they didn't clear the bank yet. These down here, we would expect that to be the case because we wrote them at the 2/28 at the end of the month, and we sent them out in a check. So maybe they went out in the mail. So they're not going to clear till sometime in February. So if we were then to question that and say, well, did they clear? We can check them out, and we can check out February's bank statement, go to our bank, check out February, see if they have cleared. If they have, then it's not a problem. It's just a timing difference. We're not reconciling just to find these timing differences to check on these 4 checks. We're reconciling, and there's 5 checks in this one. We're reconciling in order to check that everything else is basically correct as well. Because if I know exactly what the difference is, I'm not just figuring out these difference checks and looking into those, although I'll do that. We're looking, that'll reconcile the entire thing because we know exactly what the difference is as of a point in time. Now this check up here I'm more concerned with because we wrote that in January to Verizon, our phone company, and it hasn't cleared all the way through February. That's unusual. That's, we would expect that to clear. So now we're thinking, okay, that check might have gotten lost in the mail. Let's talk to Verizon and make sure that we're in good standing with Verizon. I don't want to have penalties or interest, or I don't want my phone turned off or anything like that. So that one's going to be a concern to us. So that one is something that we will follow up on. I might then check that in March. I'll look at it in March and see if it cleared in March, because we would be doing this reconciliation sometime after February, of course. If it hadn't cleared in March, then I'm really concerned. I'm going to say, okay, it looks like that one's lost. I'll call Verizon and come up with some other arrangement. All right, so then these other two we're going to have to enter. So we'll enter the withdrawal and the bank services. Now remember, the withdrawal, if you're like a bookkeeper and you're doing the bookkeeper for somebody else, or even if you're doing your own books, but let's imagine we have this communication issue with somebody else. We're doing the bookkeeping for somebody else, and we say, hey, look, you've got this withdrawal, you took money out. We would like it to be that anything that's for business, you don't use cash for. You use some means of like a credit card if you need to, or like a transfer, electronic transfer, or a check, because that gives us the vendor that we can then see what that vendor should be tied to as far as an account. If you just use cash, then we don't know where to put it. So we would like to say every time you draw money out as cash, that's fine, but we're assuming it's for personal use. Now, if you can't do that, if you use cash in the business, then you're going to need some way to track it, to track the audit trail. You got to copy the receipts and keep the receipts and do that kind of things so that we, the bookkeeper, know what it is. You're going to have to give us a schedule of what your cash payments were that were for business. And last time we did that, we recorded this as an expense last time. Let's do the way we would like to set it up this time and say, okay, that we're able to assume that any money that's taken out that's going to be cash is a draw. That's going to be a draw. And that means that he took it out, or the business owner, the owner took it out for personal use. So we can record it to equity as opposed to an expense. So let's do that over here, and then let's go to our reports. Now I'm going to open up the bank, the register. You can do that in banking. I'm going to go to lists and go to the chart of accounts, because that's what I've been doing in the past. Double click on the checking account, and I'm going to enter the draw as of 02/28/21, and I'm going to say this is other because it's like a draw. And you could put the owner's name in here. I'm going to skip it for now, or you could put owner. Let's put owner. And then I'm going to say that this was a draw. It was for the $500. Now this time I want to put it to an equity account. So if I look at the equity accounts, because it was taken out by the owner, so it should not affect the income statement. It should not be a deduction. It should be something going directly to equity. Now, QuickBooks gives us a nice little thing here when we use a sole proprietorship saying draws, which you can track separately. So now we have equity. Equity represents the accumulation of income over time that will roll over. So the income rolls over into the equity section. Investments, owner investments, represents us putting money, or the owner putting money into the company. And then we have the draws represent us taking money out of the company. So we'll kind of break those out into separate categories and be able to track them separately in the equity section. You could group them all together and just put them into equity if you so choose. If you have a partnership, then you're going to want to make sure that you have a separate draws account for each partner. Very important. If it's a corporation of some kind, then you will have dividends and whatnot. It'll be a little bit different. So you'll have the same thing, but you'll have to declare the dividends, or it'll be dividends of some kind. Okay, so we're going to say then we have the draws. Let's put it into the draws, and this is going to be an owner draw, so you could put a memo. I won't put one here. I'm going to say record. Also, just note that when you think about these items, like these expenses and these checks, you might see a situation also, it's very common, where you're saying, hey, it looks like some of these expenses that were taken out of here are personal. So you might say, hey, you got an expense going to Disneyland or something. That doesn't look like a business expense. I'm assuming it's not. What should I do? What would I do with that? If I ask the customer, or if it's my books and I had an expense up here that I took out of my checking account, an electronic transfer for Disneyland tickets or something like that, then what do I do about that? Because I paid for it out of the same checking account. Well, what you're going to do is you're going to say that payment that you have, what you should have done, what would be easier to do from a bookkeeping standpoint, is to take the money out as cash or transfer it to your personal checking and then pay for it from your personal checking. But it was paid for from the business account. So then when you record the check, the electronic transfer, or whatever you use to pay the tickets with, the other side would once again go to a draw. So instead of taking money out, you paid for something in the checking account that was for personal use. The other side should go to draws. Now you'd rather not do that as much. You'd rather take the money out or transfer it to your personal checking account, or else it's going to get confusing, that you're paying for personal things out of the business checking account. But if that happens, then you basically just record it to draws instead of to an expense. So it would be just like you drew the money out and then paid for the ticket, instead of paying for the ticket right out of the business checking account. Okay. So then the other side, the other one's going to be the service charge that we saw last time. So this is just standard. So this is going to be other, not a check. And now we've got the service charge. You could put the name of the bank. It was $20. And the other account's going to be the bank service charge for them charging us whatever they're charging us for doing the bank stuff. So I'm going to say okay. And then those two items, if I go back to the bank reconciliation, we'll see. Now we have those two items should be there. If I scroll down a bit, we should, oh, here they are. Here's the 20 and the 500. So there are those two items. Now we're reconciled down below. So it says, hey, look, the ending balance matches the cleared balance, which is the amounts on the bank statement, right? So now we're matched out. We checked everything off. So now all the things that are checked off tie out to the ending balance. So that makes sense. So you might say, well, how do I know whether this ties out to our balance on the balance sheet? Our balance says 108,504.88. And so how do I get to that balance? And the way to get to that balance is these items that are not checked off. They're not checked off and they were written or put into the system in this month, in February. Those then are going to be the reconciliation items to take it from the bank balance at the end of the time period to our balance on the general ledger. So this is the process of reconciling. And then once we reconcile, we'll generate a report, and that report will be the reconciliation, which will then take this balance, which is now the ending balance on the bank statement, and it'll look at these items, which are the reconciling items, the uncleared items, to tie out and reconcile to what's on our books, what's on the balance sheet. So I'm going to go ahead well, let's basically leave right now. I won't actually reconcile it this time because I want to look at the reports a little bit more in more detail. So everything is good at this point. I'm going to leave now, and then we'll actually push the button next time and look at the reports when we do that next time. So I'm going to say leave, and then we'll get back to this next time.